What's going on, everyone? My name's Obi and welcome back to Courtside Financial, where we break down the latest business and technology moves. Today, we're going to talk about something pretty groundbreaking. If you've been watching me closely, you already know what I'm about to get into. NIO is no longer surviving. They're now building something real. And I'm not just saying that because I'm long on NIO. I'm saying that because of the numbers, the institutional money, and even the bears are starting to tell a different story. Fresh news on Mirattery that just dropped. Goldman Sachs changing their price target, increasing it, and we're even taking a side quest to Japan to see if we can learn something that the rest of the industry can do based off what's happening over there. So let's get into it. All right, here's the situation. If you've been following NIO, you know there's some noise around Mirattery. Mirattery is NIO's battery asset operator, and there's a lawsuit from GIC, which is a Singapore National Wealth Fund, against NIO. Basically, we're not going to get into it. I've gotten into it in so many episodes, but what they're claiming is accounting irregularity. Look, I personally don't buy it. I think the business model is pretty sound. I think it's just something that is pretty foreign and not new to the market, and so the bears are lashing on to that to create a bear case. But I'm not a lawyer, I'm not a judge, and so we'll let the courts sort that out. However, and this is big news from yesterday, November 2nd, today's November 3rd, Mirattery just closed a $94.2 million Series C round of financing. And here's why that matters, because they didn't just get money from shareholders. They brought in two state-owned enterprises as new investors. Let me translate. Chinese state-backed money doesn't follow companies with sketchy accounting going on. These institutions do deep due diligence and they just said, yep, we're good with this. Let's give them the cash. The scale here is massive. Mirattery is managing over 30 gigawatts of battery assets, serving more than 40,000 users with over 160 patent applications, 59% being invention patents. This isn't some shell company. This is the foundation of NIO's battery as a service model. And that battery as a service model, it's a competitive moat. It lowers upfront cost, gives customers flexibility, and creates recurring revenue that traditional automakers just can't replicate. So when I see Mirattery securing this funding with state backing, it tells me the model is being validated at the highest level. Bottom line, the case is pending, but the financing round that they just received, the massive financing round that they just received, that's a vote of confidence. For those of us who believe in NIO's long-term vision, this is huge. Now let me talk about something that had me smiling this afternoon, guys. If you can't tell, I'm pretty tired, but this still had me smiling this afternoon. Goldman Sachs just raised their price target from $4.30 for NIO to $7. Now, before you pop champagne, let's look at NIO's current stock price so I could be accurate here. NIO's current stock price closed today at $7.42. So what does that mean? That means that Goldman Sachs price target for NIO is actually a little bit below where NIO is currently trading at. So Goldman Sachs is technically bearish with their neutral rating, just classic Wall Street hedge speak. But here's what's interesting. Goldman Sachs analyst Tina Hu raised NIO's 2026 to 2030 sales forecast by 6% to 11%. Why? Because the product strategy is working. The Onvo L90 and the third generation ES8 are driving sustained sales growth, and Goldman Sachs sees this momentum continuing with the upcoming Onvo L80, the NIO ES9, and the refreshed ES7. So here's the kicker though. Goldman Sachs expects NIO to hit a full year non-GAAP EBITDA break even in 2028, a full year earlier than their previous 2029 projection. And NIO is targeting their first quarterly profit for Q4, which is literally this quarter that we are in right now. When Goldman Sachs, an institution that has been aggressively bearish on NIO, moves their price target up by 63%, that's not them being bullet. That's them realizing that they understand what happened here. NIO has gone from survival mode to building a multi-brand ecosystem with real volume, real pricing power, and a path to profitability. The L90 is crushing it. The ES8 hit 10,000 deliveries in just 40 days. Guys, this isn't hype. This is execution. Goldman Sachs is obviously still cautious, but the fact that they had to adjust, that tells you everything. The story is changing and profitability isn't the finish line, it's just the beginning. Now I want to take you guys somewhere unexpected today. Japan, specifically to Lexus factories, and yes, this connects to NIO, so just stay with me. Chinese EV makers are crushing it on automation and tech. Lights out factories, intelligent driving, over-the-air updates, chips. China's ahead in many ways, but Japan still does something better. And trust me, it's not what you think. Walk through a Lexus factory and you don't see full automation. You see craftsmen, actual Takumi master craftsmen working alongside machines. And here's the insight. Machines are better at precision and repetition, but humans are better at feel, judgment, and handling the unexpected. Take a windshield installation. A robot applies adhesive with perfect consistency, but the actual installation, where you need to feel the fit and adjust for variations, that's done by humans. Or paint inspection. Machines measure color scientifically, but human perception under different lighting is still much superior. And here's where it gets relevant for intelligent driving. Chinese automakers are pushing end-to-end AI system. Powerful, yes, but unpredictable. They can develop weird patterns and can't self-correct without human intervention. Experienced drivers handle corner cases better than current AI, but machines win on highways with endurance. So the answer isn't human or machine, it's human and machine. Toyota has 3 core principles. Safety first for workers and customers, thorough in everything. The unsexy details matter the most. Good products, good thinking, culture drives excellence. Here's the opportunity for NIO because they've mastered speed and tech, but have they mastered the culture of craftsmanship? Some would argue yes, and I could see the argument. I say NIO cars are pretty well built, but NIO's also doing things at a very small scale. We talked about in our last episode what happened with the Li Auto Mega and how NIO is really trying to scale the ES8, so much so that they're taking batteries that could be used to construct new battery swapping stations to use those to manufacture ES8s instead, the 100 kilowatt hour batteries. And when you're scaling production so rapidly, you want to make sure that you keep the quality and the craftsmanship to the level at where it's at. NIO's producing at a small scale right now, but what happens when they start to when they continue to expand and get bigger and do things at a, let's say, Toyota or Honda scale of manufacturing, producing, delivering cars? Do we see what happened with the Li Auto Mega, which caught on fire if you haven't seen the last episode? And they had to do a ton of recalls if you haven't seen the last episode. Because NIO is targeting premium buyers who care about feel, refinement, and details, you can't quantify those things. This isn't about going backward, it's about recognizing that the best factories, cars, and AI systems, they're not going to be 100% automated. They'll be intelligently hybrid with humans and machines, each doing what they do best. So let's bring it together. Mirattery secured nearly $100 million with state backing, validation that the battery asset model works. Goldman Sachs, despite still being cautious, had to acknowledge NIO's reality, which is that NIO's execution is driving real growth and profitability is coming sooner than they thought. And Toyota reminded us that in the race to automate everything, we can't forget the value of human judgment and craftsmanship. For NIO, the narrative is shifting from will they survive to how big can they get. They're not out of the woods yet. Q4 profitability is still a target, not a guarantee, but the momentum is undeniable. Record deliveries, institutional upgrades, strategic financing, and a multi-brand portfolio that's actually working. This is what the turn looks like, Courtside family. All right, that's it for today's video. Stay sharp, stay cautious, and keep building your edge. If you found this video informative, insightful, or useful, make sure you hit the like button, make sure you hit the subscribe button, click the notification bell icon, and leave a comment down below. Your engagement does help a lot with growing the channel, helping us to reach a broader audience. So I appreciate you all very much. Happy Monday. This Monday's been a Monday, but we powered through. We didn't negotiate with ourselves and we got this video out. If I did it, you could do it too. I'll see you guys in the next one. This is Obi signing off of the Courtside Financial Podcast. Goodbye.